Here's our guest lineup. Gautam Chacharya, Head of India Research at UBS, will be joining in. There's Ashwini Gujral, Fund Manager at ashwinigujral.com, and Gultek Chandani, Investment Advisor, joining in. Ashwini, let's talk about, the overall liquidity situation hasn't been too supportive for our markets. What is it that you will be monitoring in terms of technical levels on the index from here on?
Well, it's clear that the market is moving in an extremely narrow range, and it needs big money to move sharply higher, and that is not coming. So for the moment you have individual stocks, and you have to identify the stock of the day and participate in that. We are not seeing great follow through, because in a 20-point range it's very difficult for one stock to gain 40-50%. So chances are that 6050, 6100 remains a very narrow range, and whichever way we come out, the odds of which are much higher on the downside will give a directional move to the market. But it appears to be extremely clear that we are not following through on any of the global moves that are seen. So it would be a mistake to go in and buy because Dow is up or Asia is up, etc.
Gautam, we've been seeing for the last 10 trading sessions that we are holding on to key supports like 6,000. The conviction and action of the markets are clearly missing. Are you saying that now up till until elections, this is what we have to deal with, completely lackluster market?
No, you'll still see moves. I don't think market will stagnate at one level. You'll still see moves, but not really like what you saw towards the end of last year. You cannot extrapolate that and expect markets to keep on running. For example, markets touch 63, 6400 levels. To expect another 5-10% move from there, that seems an unlikely scenario in our view. It can still go back up to 63, 6400 if things start turning more favorable, especially on the global macro side, and if the local exit polls gives investors more confidence. But for markets to keep on running, so the point we are trying to make is that it's unlikely the markets will start pricing in completely a positive electoral outcome pre that outcome actually happening.
Stock of the day clearly was Reliance Industries. Ashwini, at the receiving end of a lot of negative fundamental news, but as a stock, how do you see it panning out on the charts? Do you think that it's likely to remain in consolidation phase with a downward bias?
Well, first of all, I don't think Reliance is consolidating. I think it's in a clear downtrend. It's broken below 835, 840, which had held on for the last many months, at least since September. So chances are that, if the current news flow continues, we could test the lower end of the bigger range, which is closer to 760, 770. So Reliance clearly is showing weakness and is expected to move lower, whereas the rest of the oil stocks like oil marketing and even CAN, they are showing different charts, and they could be moving higher while Reliance moves down.
Marketing companies were extremely active today. On the newsmakers, HCL Tech, Tata Motors, for example, was extremely active. And Gautam, come to you on Tata Motors. Post the numbers, a 3% uptake. Are you still bullish on Tata Motors, or is it time to watch the stock cautiously?
We're still bullish. We still like the name as far as the view on the stock is concerned. It's not no longer one of the top picks in India per se right now, but within the auto space it remains one of our preferred picks. We still like the stock, and we still see some momentum left in terms of JLR. JLR surprising in terms of numbers, but obviously compared to where the stock was a few months back, the risk reward has become less attractive, but still a buy for us.
Gultek Chandani also joins in on the show. And Gul, what is it that you're reading of the markets from these levels?
I think the market is waiting for the polls to be announced, and obviously if we do get luckily a good vote on account, and I don't think there will be anything drastic hopefully in that, then I think the market will start kind of consolidating and moving up. But this is a good level to kind of start slowly staggering and picking up your stocks, hoping that there will be one party government at the center. And the chances, obviously, as everybody has been telling us, is pretty much for BJP. And if that happens, then I think there will be a party in the market. So you have to kind of strategically place yourself. I think that coming to the sectors, they are pretty much the same. Pharma, auto, to some extent, then IT, which has always been a core of the portfolio, some private banks, and selectively a few PSU banks. And then whatever other companies you could identify on a bottom-up basis, at least in my case, I have been even looking at mid-caps and small-caps and buying those.
Ashwini, Pharma was extremely active today. Leave aside Dr. Reddy's, but Aurobindo Pharma came back with a bang. There was strength in AstraZeneca and a couple of other mid-cap stories as well.
See, I don't think you can, club everything together. There are some pharma stocks which are making new highs. There are other pharma stocks which are not doing so well. But it appears Dr. Reddy's is making fresh highs, and possibly after a consolidation, I think it should head towards 2800, 2850. So nothing wrong with the chart there. Maybe the results were in line and discounted, but any and all pharma stocks which are making new highs, those are the pharma stocks that you need to participate in. Anything which is nowhere near new highs or is making 52-week lows or 3-month lows should be kept away from.
Gul, run us through what is it that you're expecting in terms of, results from the overall metals basket. What have you made of the results that have come out thus far as well?
I think the metals market, the pressure because of the rupee is little bit less, but I don't know how these large companies, particularly Tata Steel, what their international arm is doing. They have shown the numbers on monthly sales pretty good. Their European operations they have been claiming. And what I have been told is that the EBIT will go up, but necessarily don't know the exact PAT. But overall, I am holding on to Tata Steel as of now and maybe a little bit of sale, but not aggressive on these counters at all.
Okay. A couple of key mid-cap numbers coming out tomorrow, Gul. I don't know how closely you track these companies, but there is an Eicher Motors which comes out with numbers, and somehow they've shown that they are doing very well in the last few sessions. Tata Communications comes out, as does Bata India. Do you track any of these companies?
Not necessarily. The Bata, yes, I have it in my portfolio, but it's more like an FMCG play. It just has been there from the price of around 350 or 400.
You're making money, all right. Ashwini, what about if somebody wants to make money? A Bata India just shot up in trade. Dealers suggest that the numbers could be better than estimates tomorrow. Is there a trade in Bata?
Well, on Bata, the trend used to be much more stronger than it is now. And, we are able to maintain above 1,000, only then the trend turns positive. And once we do that, it should get back towards those 1,065, 1,080 sort of zones. It's gone through a sharp correction, and I think it's now ready to be bought post its closing today, which has been above 1,000.
Jayaprakash Associates, and it was an encouraging set of numbers. Gautam, do you think money could still be made? What is it that your approach would really be to names like a Jayaprakash Associates, which again have exposure to many industries?
Yes, so our basic call on the infrastructure investment cycle is still that it's still early to bet on more leverage or higher risk names at this stage of the cycle. While we do believe that, and we've been saying that for last 3-4 quarters, that the building blocks for investment cycle recovery are being finally put in place. But investment cycle is not consumption. It cannot be turned on in 2 quarters or 4 quarters. It takes typically 2 to 3 years at the minimum. And specifically in India's case, where there have been non-cyclical reasons for the capex cycle to be dampened, it will take at least 2 to 3 years for any signs of recovery to happen. But the building blocks are being put in place, and therefore it depends on the risk appetite of the investor, the time horizon he's looking at, and in that context, from the next 6 to 12 months, it's still a bit early to position in the higher risk or leveraged names from a top-down perspective. So in that context, JP will still not be a name which we look at in the portfolio from a top-down perspective, from a next 1 year perspective. Yeah, if you're willing to look at from a 2 to 3 year perspective, then yes, that could be an interesting name to look at.
Let's get in a sense as to what exactly the dealing rooms are talking about, which are the individual stocks they're betting on. Ajay is here with the list. Ajay.
Hi Aman. Aman, in the broader markets there is a lot of interesting activity happening. HNI accumulation kind of moves are being seen, and Kaveri Seeds is one such stock where a lot of big HNIs are focusing and are collecting or accumulating that particular stock. Very good set of third quarter numbers. In fact, there has been talk of this company being bought out by some MNC company, which the company has denied, but on the fundamental basis, very strong set of numbers, and after the fresh numbers of third quarter coming out, the stock continues to trade at around 6 times 1 year forward earnings, making it one of the cheapest stock in the agri space. Over 50% profit growth being clocked this quarter, and of course the management commentary is very positive to analysts. So that is one stock where dealers are recommending positional purchase. Apart from that, C8 from the auto ancillary space is another one where a lot of interest, trading as well as investment interest, which is setting in. Interestingly, C8 is also being seen as an export play. So not only pharma and IT, but analysts are recommending auto ancillary stocks such as C8 as an export play, and also falling raw material prices play. And we saw that being reflected in the third quarter earnings. So keep a track on C8 and Kaveri Seeds. Dealers are recommending 1 month to 45-day kind of a horizon on these two stocks for 8 to 10% kind of returns.
Okay, we'll watch out for those. Thanks a lot for that, Ajay. So those are some key stocks to watch out for. Ashwini, if you were to give a couple of trading recommendations for tomorrow's sessions, which one would it be?
Well, first of all, HCL Technologies is a buy with a stop of 1440, target of 1510. Tech Mahindra is a buy with a stop of 1840, target of 1910. And Arvind is a sell with a stop of 145, target of 132.
Guru, can you nail it down to some individual stocks that you'd like within the sectors that you flagged off earlier?
You asking me, Aman?
That's right.
No, I've been doing a little bit of purchasing like on debt-free businesses which have a long tail. Companies like VST Tillers, which I bought some time back, LG Balakrishnan, which when it was down, and generally kind of doing a little bit of here and there, and focused only on the companies which have very low debt and not this kind of huge leverage which will break their balance sheets, and sticking to quality for a change. And except for adding a little bit of Jain irrigation DVRs after the numbers, which weren't so robust, but hopefully with irrigation going forward looking up, I think the DVR at 30 rupees is a reasonable bet. I won't say it's a great bet. And obviously trimming off some of them which have made money like KRBL and things like that.
Ashwini, do you think the likes of a Madhusun Sumi as well as the Bharat Forge have the legs to go up further?
See, there are certain global stocks that we have in our markets along with tech and pharma. So these are global plays, and as long as global markets continue to be in good shape, particularly US and Europe, Madhusun Sumi and Bharat Forge, etc., should continue to do well. Some stocks are in a bull market of their own, and that is likely to be maintained whatever happens with elections or Indian market, etc. These stocks will continue to move higher.
Gautam, are you now bullish on autos as a pack? Because whenever the economy does recover, names like Ashok Leyland, etc., if the CV cycle turns, could do well. Do you like some of these stocks?
So yes, obviously Ashok Leyland you could even argue it's like a deep cyclical right now. But we do have to see meaningful economic recovery, or at least clearer signs of recovery, because even the downturn has been far more severe than what one initially expected. So in that sense, yes, this turnaround can be also equally sharp. But we have to see meaningful signs of demand or recovery happening before from a top-down perspective becoming overweight on the CV cycle. From the broader auto space, we still prefer Maruti and Tata Motors. Mahindra is also a name which we have a buy on. We do not like the two-wheeler space where both, in our view, three things are a concern. One is the competitive intensity, specifically given how Honda has been doing and how Bajaj has been losing market share locally, and the signs of pricing pressure. Second is the entire expectation around rural was more a euphoria in our view. It was a positive, but the delta for two-wheelers would have been limited in our view, and that's clearly playing out. And third is even the margin surprise potential, which has been talked about, is not playing out because, as we had highlighted earlier, the input price pressures are a reality, and that will kind of moderate that. And keeping these three in mind, valuations are not really supportive. So we still maintain our underweight call on two-wheelers.
Okay, so we've gotten quite a fill of individual stocks to watch out for. Many thanks, Ashwini, Gautam, as well as Gul for being with us on this leg of markets tomorrow. On that note, from Neeraj, me and everyone that put the show together, thanks for watching.